Hello everyone, Colin here with Harness Money, and let's talk about Zillow. The Zillow stock has been beaten down hard these past few weeks because a lot of negative information has come out about the business. The CEO has come out and released a statement. They are selling off homes. They are getting out of iBuying. They are laying off workers. And let's dissect what is all behind this, and do I believe if this is going to be a stock that you should be investing into. I've had this on my watch list for a long time because it is in growth mode. Zillow is a growth business and they are continuing to reinvest all of the revenue into the business to keep it growing for the next few years. Let's dig into the numbers, just some of the top line numbers. Right now, they are worth $17 billion, and this is a significant decrease from where it was at the top, but that still tells me $17 billion is not nearly as big as some of the other big tech firms. So it still has a lot of room to run in the future. They are going to do $5 billion in revenue this year, and I do expect that number to increase next year. It's increased the past 2 years, so I definitely expect that number to just continue to increase. They are not profitable yet. They have 220 million negative in net income, so they have not turned a profit for their shareholders yet because they are spending money to reinvest into this business. Let's talk about iBuying. This is where Zillow has really run into problems, and I foresee other businesses running into problems. iBuying is really about construction because Zillow would go in and offer people a lot of money to buy their house, and then they would put in money to fix it up and then sell it at an even higher price. But the problem with construction and with real estate in general goes back to 2008. It's hard to predict the price of real estate into the future just because of the nature of the market. Right now, prices are going up really, really fast in real estate. Demand is way outpacing supply. So every single week and every single month, the price is fluctuating. It is a volatile market. Same with 2008 when there was too much supply and people were losing their jobs. The price of real estate was going down really quickly, and it took a long time for that trend to reverse. And now we are in the point where there is so much demand for housing that the price is going up. But construction itself, I have stayed away from investing into construction businesses because they are difficult, because there are a lot of things that are out of the control of the business. So labor is really out of the control. Supply, just the construction timeline itself, are all variables that are difficult to control. So I'm sure that Zillow was running into constraints on a lot of different fronts. So they were probably dealing with shortages of workers to fix up these homes. When you buy a property and then you have to rehab that property, you need contractors. And just like the regular supplies that you need, like roofing, like sheetrock, like paint, those are in short supply. So is the labor. So whenever you have a shortage of labor, that pushes back the timeline of the completion of the project, and therefore your costs just incrementally grow. There's lots of costs associated with overruns, or you have to pay these contractors a lot more. So it's a lot more difficult to control your costs because the prices are fluctuating so quickly right now. Everything is in flux. It's really hard to control all of those costs and keep on a timeline and really predict into the future what your cash flows are going to be. I don't think Zillow was prepared to do that. There's a lot of homeowners, home builders that have been doing this a long, long time and have really mastered this art. And it's still an up and down, volatile sector for those people that have been in it a long time. So for Zillow, a new entry into that market, they probably said, you know what? We're just going to get out of that. We're going to focus on our core business, which is the Zillow technology platform, and we're going to drive that to new heights. And I think that is the smart move, is to double down on not the physical building of homes, but the online connection, getting into things like mortgages, getting into advertising, doubling down on those areas rather than actually purchasing physical homes, rehabbing them, trying to get that more profitable. It's a lot easier to build your technology and continue to add features to the core website or to the core technology functions of Zillow rather than to try and create physical revenue by improving homes. The other idea is that with technology and with an app or website, it's a lot easier to iterate. You just have to reach people on their computer, on their tablet, on their phone, and the delivery system is easier. If you actually physically get into home building or home buying or rehabbing, you have to go into so many different locations throughout the United States, all the way from Seattle down to Miami. That is a lot of coordination, that takes a lot of workforce, that just takes a lot of infrastructure that I think Zillow would be better suited to putting their resources into their advertising, into building out more technology that can help consumers right where they are with their phone or with their computer, rather than trying to meet all these people in all these different locations. Maybe Zillow can do something else, like build an app that helps contractors, or build some type of app or technology that helps real estate agents or mortgage lenders provide their services to their customers rather than having to actually physically go create new businesses. But I think that this is temporary, that for Zillow, this is a speed bump, that this is something that they were hoping would work out, but obviously it didn't work out, and they're pivoting, and that they will be successful with their core business. They will refocus and re-drive into the growth of their technology, of the item that made them successful in the beginning. They were never going to be an open door. They were never looking to be an iBuying business when they initially started out. I think it was something that they thought that they could add on, but that it was never the intention to make it the sole focus of the main company. So refocusing on what they can do well, what is going to drive revenues into the future, become the Google of home ownership, of home buying, rather than trying to build it. So we'll see how it goes in the future. I still think this could be a good buying time if you were a growth investor buying into a stock that has been hit hard right now and then riding the wave back up, because they still do have strong revenues and they're going to continue to have strong revenues with their core business for the next several years. So, if you can stay in it and stay believing in this stock and believing that their technology will help consumers, then I think this is a great buy right now. So this is what I thought about Zillow. I want to know, what do you think? Leave me your comments below, what you think Zillow is going to do in stock price and what you think about the whole Zillow situation. Thank you for watching this video. Till next time, remember, make good money choices.